Hello student, how are you? I am your teacher Sunil Waysal, third year BCom, topic investment accounting. Okay, this is an first lecture on investment account. This is a introductory lecture. Let us start with the word investment. We know accounts start with the word investment. We heard this word so many times: investment, investment, investment. Nowadays this is a buzzing word in the corporate world. This is an investment. Everyone is talking about investment. So if we think about investment, we came to know there are two angles. There are two angles about investment. Some people say investment means nothing but the money invested into the business. This is an investment. Roughly or on gross level, if we think investment, what is investment? Investment means money invested into the business. This is an investment. Let us try to understand what is investment. The concept, the first person or first angle, the investment is what? The money which invested into the business. This is an also investment. Suppose a money invested into the manufacturing business. This is an also investment. Suppose money invested into the trading business, buy and sell. This is also investment. And suppose the money invested into the service business. Service business, the business which render the services to the people or to the consumer. So this is an also business. After investing this type of business, businessmen enjoy profit. Do you getting me? After investing money into this side, entrepreneur or we can say businessmen enjoy profit. For that we prepare financial accounts, profit and loss account, trading account and balance sheet. Okay. Now come to this side. This is a first angle. Now what is the second angle? The second angle is that the money invested into the securities. Money invested into securities. This is an also investment. Not in business, not in this sector, but money invested into the business, that business already established. That business is already going concern, and the investors invest into the securities like government bonds. You studied this in SP, secretarial practice, 12th standard. So money invested into the government bonds, money invested into the shares, equity shares or preference shares. Every day we heard this about ups and downs in the prices of shares. Reliance, Axis Bank, HDFC, Tata Motors and so many companies there. So money invested into the shares of particular company. This is an invested. And again also money invested into the debentures. You studied the concept debenture in SP also, and in second year become corporate accounting also. After that, suppose money invested into the mutual funds. This is also an investment. So I hope you understand first two angle of investment. First angle, that is this: money invested into the business, own business. Money invested into the own business, the business like manufacturing concern, trading concern or service concern. After investing money into this type of business, businessmen will enjoy profit. Second angle, the money invested into the already set business or already established business, already going concern business. Money invested into government bonds, shares, debentures or mutual fund. After money investing these type of business, investors enjoy interest. What? Here he enjoy profit, here he enjoy interest or dividend. I think no need to explain what is dividend, what is interest. You already know this. Okay. So in this chapter we have to deal with these types of businesses or these types of activities. Suppose Mr. Sunil Waysal invested into shares. Suppose Mr. Sunil Waysal invested into debentures or government bond. student has to kept account about these activities, not these activities. In this chapter we have to deal with this. Now come here, types of securities. As I told you, money invested into these types of security, government bonds, shares, debenture, mutual funds, like these types of securities. Generally there are two types of security. The first, fixed yield security, the security which yield fixed income over a year or over a time. This is known as a fixed yield security. For example, debentures having fixed rate of interest 6% per annum, so this is an fixed yield securities. Preference shares, 8% preference shares. So what is 8% preference shares? 8% means the rate of dividend on these shares, or 6% debenture means the rate of interest that investors will receive. Okay, fixed yield securities. After that, variable yield securities. In opposition, that inverse. On the other hand, what is variable yield security means? The securities like shares where the dividend is not a fix, which vary year to year, which vary quarter to quarter. There is a no fixed rate of interest, or there is a no fixed rate of dividend, which is changing. Why? Because there are so many factors which affect the rate of return, such as the political condition of the country, then economical condition of the country, ups and downs, prosperity, recession, growth, then legal position in the country. Suppose there is any amendment in the corporate law, there is any introduction of the new law which affect the viable yield security. So many factors, natural factors, social factor, economical factor, political factor, legal factor, even though technical factors also affect the rate of return on such a security. So this is known as a viable yield securities. Okay, now the question, what student has to do in this chapter? What is the responsibility of the student? So responsibility of the student is to prepare investment account. क्या करना है स्टूडेंट को इस चैप्टर में? स्टूडेंट हैज टू प्रिपेयर investment account, and which is very simple. Okay, I will explain what is the investment account. Now my first question to you, which investment account is which type of account? If you know this, investment account is which type of account, whether it is a personal account, whether it is a real account, or whether it is a nominal account. If you know this, then there is no need to explain the meaning and how to pass the journal entry and how to post the transaction. If you know this, you will get answer. So which type of account is this? Investment account is this. Yes. Investment account is a real account. Investment account is a real account, as like any other asset. It is a investment account. And what we do when we purchase asset, we debit it. Suppose I purchase machinery, what will be my entry? Machinery account debit to bank. Right? Suppose I sell machinery, what will be my entry? Cash account debit to machinery. So as like any asset, investment is also asset. Okay? So investment account, ledger, I am talking about ledger, two side, debit side, credit side. Whenever investor purchase the investment, debit it. Right? Whenever investors purchase the investment, debit it, or whenever investor sell the asset, credit it. So there are column, date column, then particular column, then capital column, cost column, interest or dividend column, and same column on the credit side also. I will explain in detail when we go to solve the problem. Now you have to understand these types of security freely bought and sold on the stock exchange. Why to need to maintain this account? Because such types of investment freely bought and sold on the stock exchange. That's why the investor needs to prepare the account. Now objective, what are the objectives to keep this investment account or to maintain this investment account? The first objective, to find out profit and loss from each kind of security in which he is dealing. Suppose I am investor and I am dealing in different securities. Suppose I am purchasing shares of Tata Motors. Suppose I also purchase debentures. Suppose I sell shares which I already purchased of Reliance Industries. So investors need to understand profit and loss from each kind of securities. Okay, that's why need to keep investment account. Second, to help the investors in decision making, which what happen, that investor has to take decision. If he is continuously facing, if he continuously suffering losses from particular security, then he will decide to sell it. Okay, then how he will decide? On the basis of investment account. So for decision making process, investors needs to maintain investment account. And last one, to ascertain income receivable or received during the year. The net income received from particular security or the receivable income from particular security, investors need to maintain this account. I hope you understand. Thus have a small revision, then we'll go next. Investment. What is investment? Money invested into the business. This is an investment. Two angle, two concept, two corner. The first corner, money invested into the business like manufacturing, trading, service. After investing money into this business, businessmen enjoy profit. Second angle, second corner, second concept, second hand. Investment means the money invested into the security, the already set up business. In that, suppose investor invested his money, this is an investment like money invested into government bond, security, debenture, mutual fund. After investing these types of security, businessmen or that investors enjoy interest or dividend or this fixed yield, variable yield, and like this. Okay, I hope you understand this. In the next lecture, I will explain the very important concept. This is a specimen of investment account, and then two very important concept, that is the X interest, cum interest, and FIFO method and market valuation method. Without understanding this, you will not able to solve the problem of investment account. I am again appeal you, I already provide notes on the Google Classroom. Okay, so go through it and cope this note with the lecture. Take care. Bye bye.